We move on to our second conversation on the show today. The new Nigeria Insurance Regulatory Authority Act replaces NIICOM, signaling a major overhaul to strengthen the insurance sector. The act introduces greater regulatory autonomy, stricter licensing requirements, and potentially higher risk-based capital requirements, which may force a new funding round for some insurers. Key benefits include stronger policyholders, protection through improved claim resolution. But of course, we have our guest joining us now to give us that breakdown on this new policy and how it's shaping the sector, in person of Gbenga Adigun, the founder of Scrella. It's a pleasure to have you join us.
Thanks for having me.
Yes, and I mean, this new act, how is it? I mean, it's been described as the most consequential when it comes to what's happening in the sector since 2005. How so?
Yes, it's really interesting to see the new act come out. Guess what? The last time we took insurance that seriously, if I would use the word, was since 2004, where we had multiple fragmented acts guiding the insurance industry. In fact, we had as much as 5. There was one for motor, one for marine, one for general insurance, one for reinsurance. It was fragmented and just all over the place. But this new act is modern. It consolidates all those many acts into one. Also gives the regulator much more regulatory oversight. It's also going to improve innovation and see even more investment come into this space. If you look at the data on the continent, it's not so interesting. Insurance penetration in the country is at an abysmal 0.5%. So that means insurance contribution to economic activity or GDP in Nigeria is less than 0.5%. Now, South Africa has as high as 12%, which makes it very interesting, even more than global average of 6%. On the whole continent of Africa is 3%. If you take South Africa away from that, it falls to below 1% again. So we can see that insurance is extremely important to an economy, to businesses, to individuals, to family, as a financial protection mechanism. So what the NIIRA Act aims to do is to get more people included in that space, is to make people see it as a tool that is required, whether a firm, a business, an individual, is to deepen the industry, to attract more investment, to attract more innovation, to digitize processes, so that we can see a bigger contribution to the economy.
Yeah, and you have highlighted the need for that, and especially when you consider what's happening with our peers on the continent. But is it going to just take a policy? Is it just come up with a policy, come up with a new act and everything changes? Or what more is going to be needed to really see that increased penetration of insurance within the country?
Fantastic question. So it's not just a policy pronouncement or a new act. That's not where it's going to end. It's going to create a deepened ecosystem where everybody is going to, come forward and do things that would help the industry. For example, starting from the regulators, NIICOM, our regulator, National Insurance Commission, is going to give them more regulatory oversight. It's going to give them more powers. It's going to give them more supervisory rules over what we're doing. They are supposed to encourage innovation. For example, there's something called e-policies. Before now, it was not a legally binding document. But now you can start and end an insurance product or service, digitally, end to end. And if there are legal issues around it, before now it has to be something that's physical. But now they're going to digitize the whole process, from onboarding to claims to regulatory renditions to all the rest of it. For players like us in the insurtech space who are trying to innovate around distribution, using technology to distribute, because the main problem of insurance is people don't have access to the product. People don't know about the product as a financial protection mechanism. People don't know what it can do for them. People don't trust it for those who know it enough. So there's also the cultural nuance of, because they're like competing against cultural nuances. This is not my portion, God forbid. You're trying to sell an insurance product to somebody and telling them, when you die, your family, they don't want to hear that.
God forbid.
But again, we're all going to die. So why can't we talk about it now that we're alive? You prepare for war in times of peace. You don't wait for war to come before you get started. You're already too late. So there's a whole lot around it. So that policy pronouncement that came out August 5th this year, that was signed, not even came out, was not a pronouncement, the act as signed by the president, August 5th, 2005, consolidates all the fragmented acts that we had before in the space into one modern act that would make us appear to be future forward thinking. We are late on it, to be very honest, as a country, and people have not paid a lot of attention to insurance. However, it is still something that we need to look to as something that can spur economic growth. The administration has a vision of a $1 trillion economy. It cannot happen without that financial service insurance being at the forefront of it.
Right, and there's a lot of, you provided the context, reorientation that needs to happen. I like that you highlighted the matter of trust.
Yes.
How is this act addressing that issue of trust? Because you hear many stories. Yes, I did trust the system, and when I made a claim, my heart was broken. So how does this act address that?
That's one of the biggest, if not the biggest problem. You're very correct. So, the insured, which is customers who buy insurance products, don't trust the insurer that, like you said, when they make a claim, they will be quickly and promptly attended to and not be given any stories. So this new act, what it does is it penalizes insurance players for not quickly attending to claims.
Is there a span?
Yes, there's a timeline. There's an SLA to that, which is 60 days for really big insurance. For micro, small level insurance, it should be within hours to days. So it is very clear here. And then digitizing the industry, what InsurTechs would do would make even claims processing seamless and fast. It will make onboarding fully digitized. There's going to be lots of API sharing from the regulator to the players to the clients. A lot of everything will happen end to end, and that's what technology does for you. It helps you to make processes faster, helps you to distribute even faster. So we will now begin to see customers trust the industry a lot more. My car has an accident. I'm not giving too many stories. They're answering me or paying out the claims as quickly as possible. So if that begins to happen enough, that you have a delighted customer after a delighted customer after a delighted, you begin to see people appreciate.
And they have the law behind them.
Exactly. Yeah. And then they'll be your disciples telling every other person about why insurance. It is a very, very important financial safety net. And the Act, for example, does introduce some things that were not really paid attention to before. Compulsory insurance. For example, if you are a developer, a lot of them are in Lagos building houses, you must ensure that your project.
That's when it's more than a story building.
Yes. Yeah. No, now any new construction. So there's more compulsory insurance. There's public buildings, there's group life. Group life has always been there. Petroleum and gas stations. There's credit life. Anybody borrowing, my friends, a lot of friends and brothers in fintech, they are loaning money out to people. They must pay. There should be an insurance component to it, so that if anything happens, disability, death, illness, loss of job, the insurance company can pay them. That will reduce the risk that these guys carry in their risk asset portfolio, and can even help some of these fintechs continue to live on. So we can see that the multiplier effect is very, very enormous, and it's going to ultimately help the economy.
Yeah, I mean, it'll be interesting to see how we're able to sell that as not another burden, but as another layer of protection for the industry. We have the former president of the Nigerian Council of Registered Insurance Brokers. He said just 60% insurers are on track to meet up with some of the requirements of this new act. What's going to happen to some of the smaller players? What activity are we seeing there?
It's a big problem. Before, your whole balance sheet or capital of setting up a business was, say, 1 billion, 2 billion. Now, if you want to play in the life space, you'll be looking at 10 billion recapitalization. If you want to do non-life, 15 billion, reinsurers, 35 billion. There's some serious need for, we'll begin to see a lot of mergers, acquisitions, capital raise, debt capital, equity capital, all sorts, collaborations. Instead of going it alone, you might just partner with somebody who already has a license. You might focus on distribution and technology. They focus on licensing, regulation, and the rest of it. So we're going to see a lot of more collaboration and co-creative efforts in this space, and lots of capital raise. That is important, because if you just take a parallel from banking, what happened in 2005-06 with Soludo, when the banks recapitalized to 25 billion, their loan books became bigger. They could fund. Their balance sheets became bigger, capital adequacy ratios, the rest of the liquidity ratios. They could fund bigger businesses. You will notice that shortly after that recapitalization, there was a boom in the bank, in the oil and gas industry, in the telecoms industry, and many other, even manufacturing, because banks could now loan out bigger sums to businesses. Businesses could do bigger businesses internationally, and that led to an explosion of the economy. And we're on track to touching our 500 billion that we once were as our GDP. Now we're back down, about half of that.
Yeah.
So we can see how the same parallel in the insurance industry, when players become bigger, we can take on more risk, which will help more businesses become more innovative and even probably give them a bigger chance, a slightly bigger chance at succeeding at their businesses. And we know the multiplier effects of that.
Right. And as you have pointed out, some are heading to the market to raise capital. How are investors responding to it? Are we seeing renewed confidence from investors within the sector?
Amazing question. So it really helps when investors, especially from outside, come in and they see a very well set up regulatory environment. What the new NIIRA Act is going to do is that it's supposed to improve supervision and oversight and also encourage innovation while protecting the customers. For example, this new act talked about a policyholders protection fund. So about 0.25% thereabout of gross written premiums will be sent to that fund to protect policyholders for whenever their insurer goes insolvent. So when we see frameworks like this, it brings confidence. We also expect to see some policy continuity and not a lot of flip-flopping, irrespective of whatever political administration is in place. So acts like this, unification like this, we would definitely see about more investor confidence. When investors are more confident that, okay, it's a well-regulated space that is encouraging innovation, there's proper oversight, at the same time protecting policyholders, they become more confident, and we can begin to see the flows coming in to support the sector.
Interesting. And how is tech and innovation? We know that drives a lot of efficiency in any sector.
In any sector.
This probably presents another opportunity. Is there tech and innovation being built around this?
A lot of it. The first thing I would say for people looking to come into the space as first-time players is to strongly innovate around distribution. And then there has to be lots of collaboration and co-creative efforts. So you innovate around access. People, first of all, do not know insurance as a financial service that can give you financial protection. So there's also the education part of it. All of this tech can solve. We can just have an app that is teaching people what basic insurance is, how it works. And then when they eventually buy the service, they also have an app that helps them get onboarded from the beginning to the end. Before now, if you wanted to insure an asset, somebody has to come and do physical verifications of that asset. For example, your car, to make sure it's not already accidented before you come in and buy a policy, so that next week or the next day you're not making a claim. Because there's also a lot of fraud. That's another thing. This new act is going to protect a bit. It's going to protect the insurers from the insured, and also protect the insured from the insurer. Both sides sometimes don't trust each other. And that's the problem we've been facing in the industry, that technology is helping to solve in many ways, as I've just given an example of. So yes, technology is going to really, really help. It's going to make, with democratized access, pricing can reduce, premium pricing can reduce. The actuary behind it becomes more clearer, because insurance is a pool of people contributing towards a known and defined risk that if it crystallizes, you get some cover. However, it is the hope that not everybody will come and say, this risk has crystallized upon me. That's why the actuary science behind this is there. So with technology, we can increase the bucket, the size of people in that pool, then your pricing, premium pricing can come down. So technology is going to help a lot. Then some people will be hearing about insurance for the first time ever in their lives. If I have bought health insurance on my phone, maybe from a telecom collaboration, a VAS service, using USSD, using my recharge card to pay for health, and I've enjoyed the benefit, I've seen how it works, it will make sense for me in the future when I can afford a few more assets I want to protect, to think about doing my car, my house, life, and the rest of it.
All right. I think interesting developments in that regard. Nigerian Insurance Industry Reform Act signed August 2025, and let's see how implementation and consolidation goes from here. Thank you so much for your time.
Thanks for having me.
Yes, a pleasure. The founder of Scrella, Gbenga Adigun.